Hello, everybody. This is Patrick Montesdeoca once again with the Equity Management Academy live trading room coaching session for Saturday, June the 8th. Excuse me, June the 8th, 2019. On this segment, what I would like to do is to review and pick up from the last report that we published in Seeking Alpha. And also the video that we published in YouTube regarding the E-mini S&P 500. And in that report, we basically told you that the sell 2 level of the E-mini last week was about 28.72. The market was trading at about 28.30. And what you can see here, to pick up from where the report was published, the market did continue on the uptrend and got up to a high of 28.8625. Our anticipated target last week was 28.72. The weekly range was 28.12 to 28.72, and the VC PMI, artificial intelligence, identifies the area of supply or resistance, you might say, in red. And the market got up to 28.8625 and reverted back down to close at about 28.7750, which as we come into this week, we are looking at the average price to be 28.66 for this coming week. And with the market closing above the average price or the mean, the trend momentum is bullish as we come into next week. The fact that the price closed above 28.66 activates the sell 1 level target on the daily analysis of 28.95 as we come into next week. The sell 1 level that we have been able to identify for Monday is 28.95 to 29.15. And this area that you see here in red identifies the potentially highly probable area where the price will begin to attract sellers, supply. And so the VC PMI, artificial intelligence, for the daily signals is telling you that if the market runs up on Monday to 28.95, the trend momentum is bullish as we come in. The target is in place, 28.95, for you to go neutral and take some profits at that point. And then wait for the market to identify the next trigger point. But it's telling you very clearly the 2 levels of 28.95 to 29.15 where you want to unload some profits, lock in some profits, and wait for the market to activate the next trigger point. And the next trigger point basically is after the market, if it runs up into the 28.95 area to 29.15, and it comes down to close below 28.95 or 29.15 after the test, using the 15-minute bar close, it triggers a short signal either from the 29.15 area or 28.95. The alternate count is if we come in on Monday and the price closes below 28.66, it activates the bearish trend momentum, and the target is the buy one level of 28.47. If the price comes down and closes below 28.66, it activates the buy one level and the buy two levels of the area of support or demand. And the buy one level price, 28.47, gives you a 90% probability that if the price confirms the reversion from there, it's about a 90% probability the reversion will get back to 28.66. In the same way that if the price accomplishes completing the structure of the sell one level target of 28.95, you go neutral, you take profits, and then you wait. If the price closes then below 28.95, it activates the target below of 28.66, which is the mean. So, just to clarify, the VC PMI artificial intelligence gives you a very definite structure for you to come in next week and use it as a GPS for your trading, where the price levels are the ones that, depending on the action into these levels, up or down, the VC PMI artificial intelligence gives you trigger points for you to execute buy signals or sell signals within a very specific structure, a Fibonacci structure of 5 levels that you see here, within a structure of, again, identifying the specific price levels that you see on sell 1 or sell 2 using the square of 9. The VC PMI artificial intelligence identifies the average price in color, and it identifies very specifically the extreme above the mean with a 90% probability and 95% probability. The buy one and sell one levels represent the one-to-one factor of the relative implied volatility of the average price or the mean. The buy two level or the sell two level represents a 2-to-1 factor of the relative implied volatility from the mean. And it has a 95% probability of a reversion to occur, potentially as an initial target into the mean, as you see here, going back when the price came down to that 28 low, it activated, or 28.18, it activated on June the 5th, a bullish signal by reverting from what it has been identified as the area of demand. So the colors represent a visual identification of the supply and the demand. It gives you the average price, and the artificial intelligence tells you the extreme above or the extreme below the mean in order for you to trade your self-directed account using the artificial intelligence provided by the VC PMI automated algorithm.
Are you looking for an automated artificial intelligence trading system? Do you want to analyze commodities and financial markets to determine when to buy and sell? Looking for an indicator to predict future trends in the commodities and financial markets? Welcome to EMA2 Trade Live Signals. Our variable changing price momentum indicator, VC PMI, is an automated AI trading system developed and tested over a decade. The VC PMI algorithm is based on age-old vortex mathematics combined with Fibonacci wave theory, trend analysis, pivot points, and several other widely accepted financial analytical methods. The VC PMI can help you take emotions out of your trading and rely on simple mathematics to predict future trends in financial markets. This approach will make your trading more effective, consistent, and profitable. VC PMI algorithm. The VC PMI code points and levels are support and resistance levels and behave exactly like any historical supply and demand level. Therefore, the VC PMI code levels are useful as an index tool for both day trading and for selecting and exercising entries and exits for longer-term traders. Why VC PMI? The VC PMI relies on artificial intelligence to analyze markets and predicts future movements, which seek to determine what a security or commodity is worth at a given point in time. The VC PMI uses technical analysis in the form of mean reversion trading, which seeks to capitalize on extreme changes in the pricing of a particular market based on the assumption that it will revert to its previous state. The VC PMI can be applied to both buying and selling, as it allows a trader to profit on unexpected upswings and save when security or commodity is trading at an abnormal level. Visit ema2trade.com for more details.